to another edition of Fantasy Stockball with New Level Investment Management LLC. We're going to switch things up this week. Your fantasy leagues are probably over. Hopefully you won your championship. So instead of pairing a stock up with a particular player, we're going to compare stocks up with a particular team who have playoff implications on the line. And first up, we're going to go with the Dallas Cowboys versus the Philadelphia Eagles. Now, most of you know Tony Romo is probably going to be out for this game, so Kyle Orton is going to have to step up. But to me, I don't really think it matters about the quarterback. It's all about that Dallas defense or the lack thereof. If that defense can show up like they did back in Week 6 and hold Philly to 3 points, then they have a chance. If not, then Philly's going to run away with this division. And we think Philly's going to run away with this division. So we're going to compare Philly with Pandora. Their stock symbol is P. They're currently trading at $28.80, which is very expensive for Pandora on a fundamental standpoint. Their stock has appreciated close to 200% in 2013. We don't see those levels at all in 2014. So we're saying that you may want to be careful if you're thinking about diving in around these levels. One of the reasons why Pandora is probably not going to see those rates in 2014, stiff competition. Apple has already introduced their iRadio, which comes preloaded in most Apple phones now. Sirius Satellite still remains a big competitor. They have $1 billion of free cash on the balance sheet. So if they really wanted to attack Pandora's business model, they could do that. Not to mention companies like Spotify that come up on the fly, no pun intended. So Pandora has their work cut out for them. What I would like to see is another earnings quarter to see if they're actually shrinking their losses and growing their top line. Now, their revenues are coming in. They're doing good on the revenue side. They have about 82% of revenues coming in the forms of ads. So if they can find another revenue stream, then they'll be okay. So that's why we like Pandora with Philly. We both think that we think that both of these players are one-stop or one-trick ponies. Philly will probably be one and done in the playoffs. Okay, next up, we're going to go with the Chicago Bears versus the Green Bay Packers. And they're in a similar situation to the Cowboys and Eagles. Both of these teams are playing for a division title. Aaron Rodgers, is he going to come back? Is he not? We don't know. I think Matt Flynn will probably be better at quarterback than Rodgers right now. He's rusty. We don't know what he can do. He's probably still hurt. That's why he didn't play last week. So we like the Bears at home with this matchup. We just think the Bears have too much offense. Even though they put up a stinker last week against Philly, we think they bounce back at home. We like the Bears with Nike. Their stock symbol is NKE. They're trading around $78.37. Nike, just like the Bears, have been around for years. Nike, of course, started off as a growth stock. Then they kind of went to more of a value stock. Now we think they're back around that growth stock. They have a great balance sheet, a lot of retained earnings. They have a competitive advantages, and you know we love competitive advantages in that shoe game. If you and think about it, the gross margins are growing at a great rate. Shoes nowadays are costing $200, $300. I think the LeBrons are $250. I'm not exactly sure how much, but the cost to make the shoe hasn't increased that much as they have increased the cost to sell the shoes. Also, don't forget that they also still own Jordan, so they're still seeing a check of all those J's that you're buying out there. So we really like Nike. They're also getting into the technology wearable devices you wear on your wristband, and they're growing at a great rate overseas, so that's where most of their growth is coming from. Last but not least, we're going to go with the Cincinnati Bengals versus the Baltimore Ravens. Now, this situation is a little bit different. The Bengals have already clinched a playoff berth, but it's not about clinching. It's all about seeding with the Bengals. They could possibly be the number two seed. Don't forget that they have tiebreakers over the Colts and the Patriots that they beat already this year. The Ravens are still fighting for their lives, but we think it's going to be too much of Cincinnati for the Ravens. We think that Cincinnati will finally live up to their potential. They have a great offense, a great defense. Hopefully they can put it all together and get a good playoff run. We like their growth potential just like we like Twitter. Their stock symbol is TWTR. Now, Twitter had an IPO last month at $40. Now they're trading at $73.86. That's crazy. What is it for Twitter? It's all about user growth, revenue growth. They're hyper growth right now. And same with the Bengals. I think the Bengals can reach the AFC Championship. Anything less than that is a disappointment. Well, that's all we have for you this year for Fantasy Stockball with the New Level Investment Management LLC. We hopefully you learned something and have a great year. Thank you.